So it's a little after 1, so why don't we get started? Coming out of yesterday's court hearing and ahead of what we have later in the week on custody and withhold, we wanted to get on the phone with members of the constituency and talk about what's going on in the case. We fully appreciate how challenging the last couple of weeks have been as this EARN issue has unfolded, and that's something we look forward to talking about today. We can also talk about exclusivity and the plan process and what we're trying to do over these coming weeks. To try to make this a little bit more efficient, we were going to invite a couple select folks up here to have a conversation with us, and I was going to start off with Cam. And, we can have others hop up here as well. But we really want to make this a conversation to talk about what we've done and where we're going and address some of the questions that I think all of you have. So, with that, Scott or Tom, if you guys want to say anything up front, otherwise we could just get into it.
We thought it was really important to speak and engage the community. There's been a lot of misunderstanding about our position on the coins, and we thought the best way to do that was with a conversation that could be recorded and then shared.
Yep. So, with that, I guess, Cam, thank you for joining us today. And I guess what would be helpful from your perspective to kick it off here?
Yeah, so I was thinking, my perception from the creditors that I've been speaking to, we were caught off guard by the limited objection. So I'd like to kind of delve into kind of like what the thought process was. And maybe just to start, I could give what I'm perceiving it to be, and you can correct me based on what I'm saying. It seems like there were essentially two potential strategies. And I mean, we weren't looped in on what those strategies would be. I know many creditors, such as myself, feel strongly that we didn't get anything in return for the assets we deposited. It feels like they've been stolen from us under false pretenses. And that kind of drove a lot of emotion amongst people that feel similarly. And these are people such as myself who are aware that it looks like we've lost half of our assets as of today. And kind of that's like the starting point. So from that perspective, it's like you want to just get what's left and leave and call it a day. So that was kind of the thought process, at least that I had in trying to push, and I think others had trying to push for that perspective. Now, from the legal standpoint, it seems like if we were to go that route, it probably is a higher risk in terms of invalidating contracts and bringing in other things that wouldn't be helpful to creditor recoveries. So it probably creates a lot more complexity. So I can understand why it would be something that, from a legal perspective, you didn't want to pursue. But we were caught off guard, I suppose, by not being looped in on what the strategy was. And I suppose a follow-up would be, I'm wondering to what extent would the determination affect any potential recoveries for claims we might have of, say, misrepresentation or other aspects that we might have?
Yeah, so there's a lot to unpack there. Let's try to start. So first things first, I think it's important to just kind of level set here. This was not a fight that or an issue that we woke up one day and said, let's go have this litigation today. We knew the issue was out there, obviously, since day one of the case. It was brought up at the first day of the court hearing and everything. But, we were in a difficult position because the debtor wanted to sell stablecoin, and then they expanded that right to kind of have a broader determination. And Judge Glenn was, very inclined to have this litigation teed up before the end of the year. So we were sort of forced to act and respond to what was a very, very fast litigation schedule that was imposed on us. We tried to make the best of that schedule by pushing back on Kirkland in a lot of ways, because if they had their way, there would have been a lot less evidence and there would have been very limited ability to make a lot of the arguments that we ended up making that all of you made. And to even further, enhance it, and Aaron will correct me on who exactly it was, but, we to make sure the pro se constituency was in the process, we asked them to submit questions. I think Victor and Manny and Aaron, who else?
Yeah, so what I did was I took everyone that objected to the stablecoin motion where I had an email address, which wasn't everybody that objected. I sent them an email asking them to join a call on a Saturday. I think you were on that call, Cam. And we spent, I think, 2.5 hours talking about what questions you guys wanted to answer. So
yeah,
we viewed ourselves as a conduit for the questions, and I think I came up with a fair sampling where I included all of those that people wanted to answer in that, to make sure that people got the chance to.
Right. But I think the headline is, look, the process was sort of forced on us. We tried to make the best of it. We tried to include people. Now, as to the strategy and feeling surprised, look, we always can do things better, and I appreciate that maybe people were caught a little unawares of what was happening, and we regret that people felt surprised. But in terms of how we approach the issue, look, as Aaron mentioned in court yesterday, at the end of the day, the important thing for us, we could get up on a soapbox and just sort of make arguments that we don't really believe in. But what we did was we looked at the contracts and did the work, and we came to a legal answer that the customers effectively transferred the title to their coins to Celsius, and then Celsius did what it did with them. And we came to that legal decision, a determination. But I think an important thing here, though, is we also looked at it from a practical perspective, that legal position was also very helpful for the constituency. And let me talk about why that is. As I've said a bunch of times, just the company doesn't have enough coins to give everybody a full recovery in coins. And if you start letting individuals pull out particular coins that they put on the platform, or pieces of particular coins, you're going to suddenly have a lot of splintering of the constituency, because everyone's going to be very focused on, how many stable coins or ETH or BTC or Dogecoin or Cell or what have you. Everyone would have different entitlements. So you'd have, 30 or 40 different splinter groups sort of form. And that was something we wanted to avoid, and we wanted to kind of provide, equality of distribution to the extent we can. At the end of the day, some people might have slightly different recoveries based on different issues, but we wanted to try to facilitate that equal distribution. As to the claims that you all have against Alex, let me talk about that quickly, because I know this is a hot button with the AMAs and everything. What was up for the hearing yesterday was sort of a simple, an initial question, and a complicated one, but an initial question of, was a contract actually formed? When we were getting ready for the litigation, we had to make a decision. Were we going to not only talk about whether a contract was formed in the first instance, but were there defenses to the formation of that contract? Because if you sign a contract with a gun to your head, or when you're, intoxicated or under duress or under false pretenses or other things, it might be possible to void that contract and have the court say it didn't exist. We thought long and hard about and pushed Kirkland to have that in the trial yesterday, but it was just really not feasible on the timeline that Judge Glenn had foisted upon us, because it would have required us to basically, go to many customers and put together why individual contracts should be voided based on, who saw which videos or thought what they thought in very specific circumstances. It just wasn't practical. Now, that said, we have reserved that issue. So if we don't know what the judge is going to do, but our recommendation to the judge was to set aside the defenses issue and to have that at a later time. And I would fully expect that the AMAs would be a very important part for a lot of people if they wanted to make those defenses at a later time. But it just wasn't really part of the issue for yesterday. And in a similar vein, we don't view this issue as prejudicing what claims you all might have. And I imagine many of you have many claims and lawsuits you'd like to file against Alex or other founders for what they said on the AMAs or how they conducted themselves here. Those will not be affected by the fact that you have if the court takes the position that the committee advocated here. So long story short, this was really tough. It was a very short process. It was one that we didn't want to sort of bring upon ourselves, but we had to do it quickly. And we think that the legal answer we reached is right, but we also think it'll be helpful in promoting a bigger recovery and more equal recoveries for the account holders. So,
and I just want to echo one thing Greg said. This did nothing, and the fact that a defense may not have been brought or an AMA not put into evidence with respect to this contract dispute does not mean the judge will never hear it. And it does not mean that any claim that you have against Celsius or Alex Mashinsky got dealt with today. Those are all separate claims that you have against Celsius as an individual. Mm-hmm. And to the extent you believe you have a claim or cause of action based off of a harm that Celsius or Alex caused you based off of conduct that they did, you should file a proof of claim before the January 3rd bar date. That's incredibly important, because if you don't file a claim, then you can be barred from bringing one against the debtors.
Yeah.
Nothing's going to affect your claim against Alex with respect to that bar date, but you've got to file a proof of claim if you think you have a claim or cause of action against the debtors, or it could be barred.
Yeah. And just sorry to monopolize this, but on that topic, I know a lot of people have asked about the proof of claim form. I think David Adler in particular has been very vocal on this with us. It looks like there is an error in the claim form such that it doesn't readily let you assert claims that you have that are not related to crypto. We're working with Kirkland to remedy that, and we expect a new claim form will be made available so that you can more readily put all those lawsuits or claims you might want to file later on. So anyway, Cam, hopefully that was somewhat helpful. I appreciate it. Might be a lot to unpack there, but hopefully that's helpful to start off here.
Yep, that is helpful. I will say pretty much every marketing communication website, everything not in the terms of service led customers to believe that they had full control over their assets in terms of being able to withdraw from the platform. Like, we understand that Celsius is deploying them, but they presented that you could withdraw at any time, and like they have the CEO referring to them as your assets.
Right.
So it's hard to like put together the legal aspect of this with the experience that we've all had.
Yeah. I can't imagine. I mean, that you look at the videos and they really, they're really, it's really shocking. And, the examiner, we agreed that it would be best for Shuba and her team to look into the misrepresentation issue, and she's doing that in her report. And, we'll have a lot more information about that when that comes out. But we expect that a lot of people are going to want to preserve their claims against Alex or other people that were on social media or TV for that, and that the court might, address the formation defenses issue, as we called it, at a later time. And, we fully expect the AMAs to be relevant there. So, but for yesterday, it wasn't really relevant because of the fact we set aside the defenses to the formation of the contract, because that's where the videos are probably most relevant.
And then it seems like this determination greatly increases the possibility of like a new co being viable, because, I mean, let's face it, if the assets are determined creditors, there's not really anything to keep a company going with.
Yeah. I think that's that is a knock-on effect of this. If we had to shoot the coins out to everybody, and we don't know what Judge Glenn's going to do, but if you had to shoot the coins out, you all would be left with a pretty big hole because it's $5.5 billion of coins were put on, and I don't have the latest coin report, but whatever, it's $2.25, $2.5 billion. You'd have to fill that hole somehow else, and mining and litigation, the GK8 proceeds, that's going to be very hard to fill that hole with just that, because that would be all that's left.
Yeah, and they've already blown through $1.8 billion in stable coins, so what's another 18? It's not worth a month of bankruptcy. But I'm wondering, in terms of the NewCo plan, it's good that the deadline is now shifted to February, but I'm leery based on the dearth of information that the debtor has provided. I just would like the committee to hold them to providing revenue projections for any NewCo proposal.
Oh yeah.
And it might be nice if they floated formats for the data they're going to present, because I feel like whenever they present anything, it's really not detailed, and it tells, with the limited details they provide, it tells a very different story from the oral representations.
Got it. Yeah. There's a few things there. So first off, when the Chapter 11 plan is put out there, there's going to be a big, thick document that goes with it called the disclosure statement, which, if you've ever bought stock, is kind of like a prospectus. And before that disclosure statement is sent out to creditors, it's going to need to have a valuation analysis. So that's going to be Centerview or A&M saying what they think the value of everything you're getting is. It's going to have a liquidation analysis, which will let you say, okay, relative to the valuation, what's liquidation like? You can make that assessment. And then third, go into the projections. If there's any kind of go forward business, there would have to be financial projections. Usually it's 5 years. And if you look at, other Chapter 11 plans, they have, you can see a flavor of how that is. I imagine that's not as detailed as many would like, but they will have to put that out there, because if the court finds that the projections aren't real or they're not credible, they can't meet the feasibility test, as it's called, that is required to confirm the plan. I think, so that's one big piece I want to put out there. Second, we actually met with Kirkland this morning for a while and talked to them a bit about the case. And it's our expectation that in the coming weeks they're going to put out an update that talks, about their efforts on the reorg idea that they have been working on, and getting input from us. And they also likewise heard loud and clear that communication is key, and they're going to try to facilitate that with a more informal ad hoc kind of updates moving forward.
And then one other thing, just to follow up on what Greg said, the disclosure statement is really important, and the legal standard for a disclosure statement is it has to provide adequate information for a reasonable investor to make an informed decision on the plan. And before the debtors can solicit votes on a plan, the court has to find that it does that. So it's not as if the debtors put out a disclosure statement and no one gets to say, hey, I need this additional information to be able to vote and to decide what I want to do here. There's a hearing where you get to say, this isn't in there and I need this to make my vote. And the judge has to bang the gavel and say, this disclosure statement has everything in there people need to make a decision. So there's a gating point in another court hearing before you go forward with the solicitation of a plan where people get to comment on the adequacy of the disclosure the debtors made.
Yep.
And when it comes to the voting process, one contentious issue in particular is the weighting of Cell token towards votes. Yeah. And in particular, there's certain insiders that have millions of self-issued Cell tokens that would be very heavy, and they directly contributed to running the company into the position it's currently in. And I find that, I just would be curious to hear your approach for making sure that the parties most responsible for where we are today don't have the most sway in terms of
Yeah.
the next steps.
Well, luckily, so look, when the Chapter 11 plan is put together, creditor claims are going to be put into different classes. We don't know what those classes will be today, but I imagine that there'll be a class for earn. Maybe there'll be separate classes for different parts of earn. I imagine there'll be a custody class. I imagine the preferred equity will have their own class. When you look at whether a class carries, you need 66 2/3 of the amount voting and at least 50% of the number of people in that class voting yes. But you discount the votes of insiders, which would certainly include Alex or Daniel or their families or their spouses. So you discount that, and I think as a more fundamental thing, the committee. We're still working on a lot of what we would support for a plan, but almost certainly we would seek to subordinate, meaning no recovery for insiders, that might be subject to litigation. So that's how their votes aren't effectively not going to count, and even if they have sell, they're not going to get value in our view. That we would expect that they wouldn't be getting value for the sell or whatever else they held.
And then one other thing I'll just add: there's a method to designate votes too, and so if it does come to pass that there's a method to bring before the court that someone participated in wrongful conduct and they shouldn't be able to vote, and that's called designating a vote under a Chapter 11 plan.
Right.
Yeah, I mean, one consideration that the small group of creditors have thought would be potentially a motion to compel the abandonment of sell token, and potentially to pitch it in such a way where creditors could withdraw their token, get paid 2x the amount of sell tokens, but it would be purged from the estate. So basically you have a situation where under this proposal, if you like sell token, you get twice as much that you have on the platform, but it's in kind and it's not going to count towards the vote. It would resolve all the issues with these heavy sell bag holders being able to sway the vote. And how can they complain they're getting twice as much as they had originally?
Yeah, it's an interesting idea. We're spending a lot of time thinking about sell and what to do with it because it just raises a lot of issues. The valuation has fluctuated wildly during the bankruptcy. There are very serious allegations of market manipulation, which the examiner and we are both looking into. And, depending on the form that Celsius has on the back end, sell is a very important consideration for that. And it's an interesting idea. I mean, we're open to any ideas, but I hadn't heard that one, but we can definitely think about that.
Yeah, and I'll just add, we haven't come to a formal decision on sell. It hasn't been presented to the committee, hasn't been voted on, and so, we haven't come to a decision one way or the other, and we're open to hear ideas on it.
Yeah.
Yeah, I mean, the way I would view it is the token is inseparable from the company, particularly when there's a huge reserve in the books, like most of the supply is locked on the debtor's balance books. And like the fact that bankruptcy was filed a month after the pause, if you look at the market volume, it's very irregular. So it's strange, like to use a market price for it is just a farce, quite frankly, even if it's below where the price used to be. Like the price was clearly supported by the debtor's activities, purchasing it and burning it.
Yeah, I mean, you hit the nail on the head. I mean, that's very critical for us as we think about what to do with it now. But at the same time, a lot of people who had nothing to do with the operations of the company have it, and it's important to them. So we want to find ways to give value to people for that if they through no fault of their own have sell that they want to get value for, just like people have USDC or BTC or what have you.
That's why I think the motion to compel abandonment with a double X sell withdrawals is so compelling because you get to keep 100% of your assets, unlike the rest of us that are like losing half of our assets. So there's really no case that they would have if they really believe in this token. So I really would strongly consider that as a serious option.
Yeah. Okay. We'll think about it. Yeah, for sure.
Yeah. One other aspect in terms of this new code proposal, I think particularly if the plan is to continue with this mining operation, outside financing is essential. And if they're unable to secure outside financing, it should be taken as a sign that this is not a viable plan. We can't finance this with our coins. So I think I would just, try to internalize that and project it to the folks.
Yeah. It's not lost on us. I mean, it's something we think about a lot. The using customer, assets effectively to fund different parts of the plan. It's something that we think a lot about, and
we're not looking to throw good money after that.
Yeah, but we hope to get some value for mining because it's you have only so many coins. The litigation, is what it is, but we hear you on that.
Okay, great. I don't want to monopolize the floor.
Yeah, no, we can. We can let others come up too.
Well, one thing, I know our chairs wanted us to talk about this, and so I think before we let others come up, I haven't seen a very broad discussion of the preferred equity issue on Spaces, and I will admit that I'm not on them as nearly as much as a lot of people are. But just to give an overview, and I knew we put this in our papers, we believe that customers have a claim at every single entity in Celsius. And we believe that for a number of reasons, but one of them is the terms of use, which say Celsius and its affiliates. And having a claim at every entity means that customers get the first shot at those assets. The preferreds say that you don't have a claim at every entity. They say that you only have a claim at Celsius Network LLC and that they have first right to the mining company and all of the other assets. And so one of the things that saying the terms of use are a contract, we think gives you a good legal argument that you have the first shot at all of those assets and get to recover before, I think it's $700 million worth of preferred equity. And so, when we're looking at the pie and how to increase it for creditors, it's something we are considering is to talk about having this claim at every entity.
Yeah.
Great. Yeah, I think also just in terms of that mining operation, presumably, I'm assuming people are aware of where the funding came from, because my understanding is, it came out in the depositions, that there was a $900 million loan that Celsius took out with Tether, collateralized based on my estimate by 40,000 Bitcoin, which they planned to hang on to the Bitcoin. It's just being used as collateral and hoping the price of Bitcoin stays up. And they invested $600 million in this mining facility from that loan. And then the market tanked and they liquidated at around 22,000 and lost all 40,000 Bitcoins. That's part of our 60,000 Bitcoin hole. So it's been, even if you're optimistic about mining, it's a significant sunk cost. So the main issue with it is it needs financing if we're going to pursue it. And the financials are really lacking in terms of justifying keeping this going, because we're hearing the oral representation that this is profitable, but then you look at the operations report and you see $10 million in revenue, $25 million in expenses. And that is clearly the exact opposite. And no matter how much you want to say that these are just rolling out expenses, like they have not adequately listed these line items of these rollout expenses to show it in a cash flow statement.
It's interesting. Yeah. Well, the Tether stuff is definitely on our list of things that we were looking into, and we appreciate the work you've done to talk about the whole. It's been helpful for us. We hear you. I mean, we can't put good money after bad. Whatever we do here, we're going to have to justify and make sure you get the most bang for your buck, whether it's customer money, external financing, what have you.
Hey, Greg.
Yeah.
I just wanted to frame this for everybody listening. That the first time I heard this argument about the strongest path to the maximum recovery, I had to hear it a few times because it was just an emotional issue. Just the sense of being lied to and being wronged and my stuff. It really took a few times to hear it, to understand it, and to view it through a practical and not an emotional lens, to realize this is the best path to get that stuff back, and the fairest path for everybody to share in whatever haircut there's going to be.
Right. So, so Cam, you're free to stay up here if you like. But we have a few other people that are raised their hands. So,
yeah.
Well, Simon, let me activate you here in a second.
I guess one last comment, just to tag on to what Scott said. I can appreciate wanting to, find a way to work our way back. But I'd say there's not any information to judge that there is a viable plan yet presented that can do that. So I would just urge the committee to make sure that people that want out aren't unfairly penalized with taking a bigger haircut. They should get a fair exit.
Yeah, and just I brought Simon and Anthony up, and we'll get to them in a second. But yeah, let me just address that real quick, because that goes to sort of the exit plan here. We talk a lot about how there's kind of three buckets of stuff. There's the crypto, there's the mining, there's the litigation. We're thinking very carefully and creatively about are there ways to entice some people to forego certain portions of those, to make it available for others. So, for example, if you don't want if you don't want to own mining, could you get more of one of the other buckets of value, or could we reallocate things so that you're not forced to take something? We don't know if that's possible. We don't know where the numbers are going to shake out, but that is something that we're thinking about, because we know some people just don't want anything to do with mining. Some people don't really have a mind for the litigation. So we're thinking about that piece there too. So I brought Simon and Anthony. I brought you guys up. We're happy to talk about anything you want to talk about here. Scott and Cam are up here still too.
Yeah, I just wanted to say one thing real quick to what Cam said about the Cell token specifically. Giving people double of a token with a company out of business is not a solution to that problem. Those people wanted to hold Cell token because they believed in the company at the time. It's like going to buy FTT token right now. Why would you want to buy FTT token with FTX out of business? It's got no use case. It's completely useless. So giving them double of a token that will go to zero, and all that will be is extreme sell pressure on the market. They'll never get anything back for those tokens. So that's not the right thing to do to anyone. I don't care about my own personal Cell token. I don't got too much of it. But for the people that actually believed in the company, that would never be something right to do. What you have to do is go by what it was at the bankruptcy filing date, like every other asset within the platform. That's the only right thing to do.
Got it. Look, I mean, just to say it again, in case people didn't hear it earlier, but it bears repeating. We're thinking, we're trying to think holistically and creatively about all of the claims and the assets, including Cell. And, we appreciate that perspective, and we know that people have different views. So we're happy to, people can send us their takes on how to, best skin the cat here, so to speak, on Cell in particular.
Yeah, one of the things I tried to put forward really early on was that really this is about a Bitcoin recovery, because as Cam said, we've a loan was taken out against our Bitcoin, which has led to 60,000 Bitcoin being missing, and lots of other things happened with our Bitcoin. And one of the ideas is that I thought that if we shift our mind around that we're trying to recover our Bitcoin, Then if we went to, Novogratz and Galaxy and said, why don't you pay for your investment in Bitcoin? And if we're filling the Bitcoin hole, the reason that's important, because it feels like trying to get the court to approve, being able to buy some Bitcoin with stable coins and all of the assets that are being sold and stuff. But the reality is that most people in crypto feel like we've got a Bitcoin hole to fill. And the more we can fill that hole with all the assets, the more we feel like we're getting value at the bottom of the market if we're selling assets at the bottom of the market. And everything should kind of work in sync. So if we can move more and more towards getting the people that are buying these assets to pay in Bitcoin, which costs them nothing, it's just an OTC trade, it's the same deal. We feel we should be chipping away at the Bitcoin hole, or I feel like. I can't speak for everyone anyway.
Yeah, so look, on GK8, I don't know Galaxy's willingness to do that. I think for the reasons you mentioned, Galaxy may well, want to hold on to Bitcoin. But
it's not holding on to Bitcoin. You just agree a price and then do an OTC trade and settle in Bitcoin, and they just go out and buy the Bitcoin. They've got their own OTC trading desk, so it's not them saving Bitcoin. It's just a trade. But it just means we don't have to go through the whole process of trying to get court approval to sell our assets to buy Bitcoin. And if we're selling our assets at the bottom, we're also buying Bitcoin at the bottom. It just feels like the path of least resistance. Because if we have this massive mismatch between, the market recovery and selling the assets, I understand it gives a degree of speculation. But if the buyer of the assets puts it in the agreement, because we are short Bitcoin, remember, being short Bitcoin is the riskiest trade in the world to me. And Celsius has the worst trade in the world, short Bitcoin. But we're incredibly lucky. We're in the worst market I've ever experienced.
I mean, Simon, the one issue I see with that is just that the thing you noted, right? If Bitcoin goes down, and you heard the court say this yesterday, that he was concerned about crypto fluctuation, then he would have okayed that instead of keeping it in a more stable currency.
Yeah, but remember, they owe us Bitcoin.
No, I know. It's
so replacing the Bitcoin with dollars is a riskier trade than replacing the Bitcoin with Bitcoin, because now you're taking currency risk.
Yeah, that's right. I just, you hit the nail on the head when you said convincing a U.S. court of that is going to be a tough hill to climb. But we'll take it back. I certainly hear the point.
Yeah, I'm just saying hit the buyers of the asset that it's a bonus if they agree to pay in Bitcoin, and then it's a lot easier to get a court approval for a Bitcoin purchase, I think, than taking assets and selling them later.
Yeah.
Sorry, I don't want to labor the point, but just want to make sure it's understood.
I mean, we'll take it back. Think about it. But I think to echo Aaron's point, it could be controversial given some of Judge Glenn's comments about his willingness to approve that, but it's something we can think about. And while you bring GK8 up, and I know, Simon, that was I know you have a lot of strong views on GK8. I think just for the benefit of all those listening, I think it'd be useful just to kind of talk about a little bit of the context of that transaction. As I mentioned in court yesterday, it's long seemed to us that the value of GK8 was very tied to their founders, and those founders, not surprisingly, wanted to extricate the business from themselves from Celsius, given the bankruptcy and all of the issues that we all are living through day to day here. So the founders are very important to the asset. So they're getting they have their own economics that they've negotiated with Galaxy, and we thought long and hard about, do we just keep GK8 for the creditors, we had to make a tough call that if we kept it for the creditors to be distributed, sometime next year, the founders might well have left the asset, in which case it could, not get, if not zero, get very close to zero. So, we kind of had to make a tough, we and the debtor made a tough call that we supported the GK8 sale as presented. I will consider the point about maybe settling it in BTC. But I want people to understand that, the prospect of keeping that and giving it to the creditors without like a very meaningful economic package for the founders, just wasn't going to work. So that's why we're selling it now, or the company is selling it now. I appreciate it's the bottom of the market, but our concern is it could go even lower if the founders were to vacate, to leave. And to that end, the court is going to have a hearing on the GK8 sale, I believe, on Thursday. For those of you who looked at the purchase agreement, you might notice that there are several GK8 entities listed on the purchase agreement that are not currently debtors in the Chapter 11 case. The purchase agreement makes clear that some other non-debtor GK8 entities are going to be filing for Chapter 11 and to facilitate that sale. So if you see news to that effect in the coming days, don't be surprised that that's planned to facilitate the sale. And if you look through the purchase agreement and search for Israeli, you can find some of the other references to that process that's going to be those filings, which will be commenced.
Do you know if we tried to give some of their equity back? Because and do you know the terms of the acquisition that Celsius originally did?
I don't know other offhand. I'm sure my firm has the information. I personally don't have the details other than what was in that presentation at the first day hearing about the original acquisition. I know it was
published. It was 150 million, but it'll be interesting if there's any. I think creditors should know whether that was sell token equity, cash, or what the mix is in the disclosure statement. I think it's just useful for creditors to be able to have this information so they could analyze the deal, because it feels like they're being left in the dark, and they could have, maybe the founders could have got some of their equity back, be incentivized to sell, a rights issue could have happened. I guess the greater question is this Celsius making these decisions, and does UCC have any say in when these assets are being sold, and how does that work?
So look, Celsius is the one that's actually going to sell the assets. We have come up with a very innovative process, though, that provides the committee with a lot of visibility and rights and direction over how that process is run. When Celsius, and again, this is Celsius run by the special committee, under supervision of the court. It's not Alex Mashinsky, it's the special committee. When I say Celsius, they came to us with several proposals, and we've worked those proposals, and invited, I think, as invited others to sort of participate. And at the end of that process, we effectively had one qualified bid from Galaxy. It was a qualified bid, meaning it satisfied the terms of the bidding procedures. I'll note, though, that we also were willing, and the debtor was willing, to waive those conditions, under certain circumstances. But even waiving them, we didn't get a bid that was actionable enough or valuable enough to go forward with. So the Galaxy bid was presented to us, and the committee was forced to consider, do we hold on to the asset and hope that the founders stay and that it could be distributed to creditors later, or do we take the proverbial bird in the hand and and do that. And we gave our recommendation to the debtor to go forward with the deal, at which point they, Galaxy formally signed the purchase agreement with Celsius, subject to the court approving it on the 8th.
And Simon, I want to be pretty clear, because I think your question was general as well. The debtors are the debtors in possession. They are the people that can sign agreements, take actions on behalf of the debtor. I know there's been a lot of talk about the UCC having to approve any plan or propose any plan. It's the debtors that are in the driver's seat now, right? That's what exclusivity meant. They have been talking to us. We are consulted on things. And at the end of the day, we are a fiduciary for account holders and creditors, and we give them advice and we can take litigation positions, but we can't make any determination on what to do with the debtor's assets. The debtor is still a debtor in possession at this point.
Right.
Yeah, I think that's really important, because immediately you get a massive UCC, you sold our assets and all that stuff. But
Right.
people just have to remember, this is Celsius making these decisions. These are Celsius assets, and it's Celsius deciding when to sell and how to sell.
And look, I am want to do Kirkland or Celsius any favors, but one thing to think about here is all of the people, the special directors, the lawyers, they were engaged just before this bankruptcy case. And so, they're working with us. We don't agree with everything or some things that they do, but we are trying to, work with them to generate the most recovery. And we are, ready and willing to go into court to fight them on anything. And that is our recourse, is to go into court and fight them to say, you can't do what you're doing.
Right.
Okay, I just got one more, and then I'll let everyone else take it. The special committee, I'm deeply skeptical. That was Alex Mashinsky's long-term contacts. Alex Mashinsky is the largest shareholder. Alex Mashinsky has the largest amounts of creditor votes when you tie it across their family, and various other things. Alex Mashinsky is still the director of the UK company, and the special committee are all friends of Alex Mashinsky. Is it true that Alex Mashinsky has no influence over this? Because I find it really hard to believe.
Yeah, I think there's two things there. Just to go back to what I said earlier, even though Alex is an equity holder and a creditor, those votes effectively don't count. And if we have our way, I expect that we will be looking to subordinate subordinate those, given some of the things that have happened. That's point one. So I think the second thing is, it is not uncommon, and it's actually very common in bankruptcy, that frankly the controlling shareholder brings in independent directors, and that's sort of that happens all the time, because it's the shareholder that runs the company, runs the board. They have to bring in new people. As Aaron said, we don't agree with everything the special committee, which is David Barst and Alan Carr, do. But we have full confidence that they are running the company today without input and untoward influence from Alex. If Alex ever did try to leverage them, those two individuals are sort of in the business of having their reputations intact, and I would be stunned. I can't imagine that they would, put themselves in that type of risk to do the bidding of Alex in this process. And even if hypothetically that happened, and I don't think that's going to happen, the court would not tolerate it. The court would install a trustee or take other actions to make sure that didn't happen. So I appreciate, and we get a lot of questions about Alex still being a director and a larger shareholder, but everything that they're doing is, in our mind, not minded towards helping Alex. The things we disagree with them about, frankly, have nothing really to do with Alex. It has to do with other issues that we're talking to them about. But rest assured, if Alex did anything to try to compromise those directors, we would be in court that day to stop it. But again, I know people are very frustrated with Celsius. Alan and David were brought in right before the bankruptcy started. They are generally trying to be cooperative with us. We have no reason to think that Alex is being untoward with them or leveraging them in some way. Again, if anything were to happen in that regard, if we thought Alex was trying to pull the strings or undercut them, we would take steps to make sure that doesn't happen.
Okay, one more request then, I think, for creditors is that being in the bidder side, you get a lot more access to information than on the creditor side. I think it would be really great to level the playing field as much as possible, not to harm the process of the auction, but creditors spending all their time debating about whether Bitcoin is profitable or not because they just don't have access to a decent balance sheet, or creditors spending day in, day night trying to estimate how many coins are on the coin report because they're dollarized. We're lucky that we've got an amazing community of creditors that are willing to just sweat day and night for this process, which is an amazing thing. But the simple, access to some of that information would just really unify creditors so much more around knowing what the long-term potential of this Bitcoin mining operation is, what investment it requires, and just really stop a lot of the like arguments just because we just, some people have access to data and some people don't.
Yeah, it's well taken. I think we're continually talking to Kirkland and Alvarez about different ways they can present information. And I'm sure they're listening to this, but we if we can bring more information out without affecting the process, we'd like to think about that. If people listening today have specific things they think would be very interesting to look at, by all means, let us know. We could try to facilitate that.
Okay, I can give room for others.
Sure. We're happy to kind of bring some other folks up to the stage if you want to talk. So in a moment here, I'll activate. Sorry.
While you're doing that, I do want to say how you got like 44 million for in the current market is a decent achievement. So well done on that.
Yeah, it helped with that, with us going along with it. So Rob Christensen, in a moment, I'm going to activate you. So Rob, you're on. Sorry, what speakers? Yeah, Rob, you should be on the stage now if you want.
Thank you.
Ask any questions.
I just have a question and a likely follow-up. In light of the UCC's position regarding ownership of the tokens, what claims do you feel creditors have for the airdrops and hard forks that have taken place since the pause? The follow-up is, will the UCC be providing any guidance regarding the claims process for these additional assets not reflected in the statements?
I'll be honest with you. I personally don't have I think the information necessary to address the flare and the airdrop issue, but we can take that back and we can talk to the right people for it. I guess irrespective of that, and we'll try to get some information on that. If people think that they have claims based on really anything related to the crypto or otherwise, they should spell that out to the best of your ability on the claim form so that we have an accurate they can reconcile that and make sure you get trued up to the right claim amount for when distributions are made.
Yeah, just to help you understand that, there's when you hold coins, which Celsius is holding coins at the moment, by nature of just holding the coin, you get entitlement to other coins, and those assets are assets of the estate, but they're just not being accounted at the moment, and some of them might become valuable. So it's worth one of the crypto people in the advisory team ensuring that there's a mechanism for those assets those hidden assets as a result of having a bit of crypto knowledge should be distributed to the estate.
Yeah, and we're not naive to the issue. We've looked at the Flare airdrop, and we're still looking at it. Like most things in this case, it presents kind of a novel legal question, and we're always trying to fit crypto into the existing legal norms, which is always a bit difficult. But to me, it seems somewhat similar to a proceed. Like if you had a slot machine, say, that was owned by the company and it spit out a prize that it awarded in terms of a reward token or something, one analogy, it might be a poor one, but I don't want people to think we haven't heard of or thought about airdrops. It's a unique legal issue, like a lot of things here.
Yeah.
Yeah, if you want the precedent, look at Bitcoin Cash in the Mt. Gox case. It became a very significant asset.
Okay.
That's an example, right? And that in addition to Flare, there's also the Ethereum fork that, there's the proof of work Ethereum hard fork as well to also consider. Those are the two that I'm aware of, but the community might have others. Go ahead.
They were holding ST ETH, so a lot of it, most, like 99% of the ETH that we hold, I believe, is not regular ETH, so you weren't eligible for that, from what I understand.
You could probably come after Lido, though, right? They exist, right? That Lido has taken them, though.
I don't know how it fully works, but at the end of the day, if it's not regular ETH, you didn't get the airdrop the same way. So I don't know how that would all come into effect.
Yeah, that's why I'm asking the question for these legal minds to work out, because I lent, if you will, my ETH before there was staked ETH was even available. So, what am I entitled to? What do I get, the derivative benefits of the ETH that I lent to them, or do they get those proceeds as was just described? So I do agree it's an interesting legal question, only frankly made more complicated by the ownership issue that was effectively settled yesterday.
Yeah, technically how exchanges work, for example, they don't need to support an airdrop either way. We're just in a different situation because we're in bankruptcy and, creditors have basically first dibs at a lot of this stuff. But at the end of the day, like Coinbase doesn't have to honor an airdrop or Binance doesn't have to honor an airdrop. They could also keep those coins for themselves historically. That's how it works.
Okay.
Right. And I briefly just Alex Mashinsky did make statements and, publicly come out on Twitter saying that they would support the Flare airdrop. So you can go back and look at that. So thank you for hosting this session. You can move on to the next speaker.
Okay. Thanks, Rob. Thanks for joining and asking your questions today. And while I activate,
Just one note: if that ETH was staked on the it through Lido or just staked it like Blockdaemon, then it would also be staked on the new chain. And I don't know, and maybe you guys could tell me, have they figured out how to unlock assets that are locked up after the fork?
No, I think everything's still locked currently.
Got it.
I believe they said mid 2023 is their goal. But with the ETH crew or any developers, whenever they tell you a goal, right, you got to give it another 2 years.
Got it. Okay. Look, I'm aware of the issue. I don't have the information here, but we'll take a look at this and can get back to you. Rob, if you could email one of us directly, we can try to get you the information and work on it.
Happy to, but I think it's a common creditor question, and especially in light of the bar date coming up, some public answers would be really appreciated.
Okay. Well, we'll let us dig into it, and we can put some information on the website or the Twitter feed and see if we can help. All right. So we had some other. So why don't we bring up? I'll bring up Joe Lair in a second. So all right. So I brought Joe up here just now. Joe, if you have any questions, feel free to let us know.
Hey, Greg. Two-part question, I think, intertwined. At this point, can you, in broad strokes, speak to how you're thinking a good, feasible framework for a reorg, whether it's a NewCo, a fund, or some other type of entity might look? And I'm also wondering, the second part of the question is like now that we had a broader crypto market nuclear meltdown, does that work in our favor? You know, that being that the spotlight may be a little bit more off of Celsius. I mean, there seems to be a real sense of urgency among regulators to come up with a framework. What can we do to get the regulators to work with Celsius to be on the forefront of creating the safest and most transparent platform in the space?
Sure. Let me talk about the regulator piece just first up front. I appreciate there was some things said at the hearing yesterday about who's talking to who and not talking to who on the regulator front. Speaking for the committee, we're in very regular dialogue with the regulators, talking to them about, how what their concerns are. We've given them, some updates such as they are about the process that's going on right now. I'm not telling you anything you don't know, but in general, the regulators have questions given the company's history, about its ability to earn their trust. And Celsius is going to have to do a lot of work if they're going to reorganize, even if new people are hired, to prove their worthiness to get the necessary approvals. We're going to keep talking to the regulators, and as the bids get more developed and we have specific things to share with them, we will share that, as I expect Celsius will, in due course. So I know there was a lot of confusion and questions yesterday about some of the statements that were made about what's going on with the regulators. Speaking for the committee, I want to share that. I think it's right now, in terms of how a reorg would look, I think that there's kind of three fundamental pieces. Like I said, there's the litigation piece, right? There's presumably something involving mining if it is not sold. The tricky part then is what to do with the crypto assets. I think we're candidly trying to manage a few different desires of the community that have been shared with us. I think on one hand, some people are like, I just want my crypto back. I don't want to be part of anything, including New Celsius. I just want my stuff back. Other people are, more open-minded to staying on the platform and, maybe, reinvesting in New Celsius or whatever it's going to be called.
Whether that be with the current Celsius team or with the new management team that gets brought in.
Yeah. So we're trying to navigate, that issue. It's further complicated because we've been talking a lot about earn. I know some of the loan people are on the call today. The loans are a very difficult issue that we're going to have to sort out with the court and the company. Many of the same arguments about ownership apply to the loan collateral, and again, there's kind of like a very big math problem with the loans. There's something like $700 or $800 million of so-called collateral backing the loans, depending on trading prices. For $400 or so million of obligations. That's a very large chunk of the coins that the company has today. If the earn and other constituents are going to receive a recovery as high as they would like. So all this is to say we're thinking about how it would work. We have a lot of legal and structural things to work through, and we're eager to kind of start putting those pieces together in the coming weeks.
And do you get the sense that the regulators are getting off their butts finally and looking to really come up with a framework quickly that might work for us, or are we in a real race against time here with this?
I guess I can only really speak to what the regulators talk to us about on Celsius. I think there's a good faith desire to do something if the creditors want to do it. But they're going to need to assure themselves that the problems under the old regime don't infect the new Celsius if that's what the creditors end up wanting to do.
I think one thing that I heard from the judge yesterday in his conversations with the regulators is that he's not keen to delay for delay's sake. And one of the nice things about bankruptcy is, you get a confirmation schedule and you set a confirmation date. And on that date, the court has to make a number of rulings for a company for a plan to be confirmed. And one of those is that the plan is in compliance with applicable law and feasible. And it's not going to be, on that date, the judge has to make the determination. And so, to some extent, the regulators are going to come forward and tell the court what they think at that date. And so it's an interesting, dynamic where, the court schedule can bring people to the table sooner than they otherwise would be. And that, any company is going to have to comply with the law. And so if the law changes before then, it will have to comply with the law before it gets out of bankruptcy. If the law changes after it gets out of bankruptcy, it will have to move to comply just like any other crypto company will have to. I don't, sitting here today, I don't know if Greg or I can say that we've talked to the SEC or the commodities group, but we have been in regular contact with Layla Milligan in the Texas Attorney General's office, and we've been keeping those lines of communication open because we understand that they're a very important piece of this puzzle.
Yeah.
Just my 2 cents, and I'll drop off. I think that narrative is going to be very important because the regulators aren't going to move as fast as we need. I think they have to hear from us that if there's going to be a reorg in any form, this is it's a new day, it's a new company, new management, new ownership, creditor owned, which is really novel. And we're here. We're willing to do whatever it takes to make Celsius the groundbreaking bedrock type of financial services for crypto, and we're here. We're willing to do whatever they request of us, and we understand that might change over time as well.
Yep.
And look, I think they're going to be really interested in the example report, like all of us. We've heard that from them over and over again too.
Yep. So Joe, I appreciate the questions today. Anything else, or I might then admit someone else here.
No, thank you.
Otis, I'm going to activate you in a moment. So let's give Otis a second here to join the stage. Otis, you're up here when you're ready. Otis, can you hear us?
Yes. Thank you very much. How you doing?
Great. Good. How are you?
I'm doing well, Greg. Yeah. So I just have a simple question. It's about the GK8. So Simon has bashed Celsius and therefore bashed the UCC in his tirade yesterday for agreeing with Celsius to sell GK8, and just told his followers that, see, I told you that Celsius is selling all of our assets from under us. My question is simple. Is the UCC along with Celsius in the process of selling all of our assets from under us? Or was GK8 simply a one-off situation where, we had no value and the owners basically, threatened to walk, and we just had to get rid of it? And that all of our other assets, we're not looking to wholesale sell from under us creditors. We see value in them, and therefore we want to try to preserve those assets.
It just at the outset, and I do appreciate the question, but I think it's important to, we really want to try to promote, cooperation and unity among the creditors. So, in answering this, I'm not going to, ascribe any. I'm not supporting anything, disagreement you might have with Simon.
No. I just want to make sure the narrative is that all of our assets are being sold from under us, and I don't agree with that.
Okay, so look, on there's two processes going on. There's GK8, and then there's everything else. Look, on GK8, it was out there for months. The founders, the company was selling GK8 for months. The founders were a key part of the value, and they finally found a bid that we thought was pretty good, and that would also keep the founders at the asset so that the company could get some value for it. That asset is obviously going to be sold. I think it's going to close in 30 to 60 days. As to everything else, the company's not trying to sell it out from under people. They're trying to find outside parties that might be willing to provide value to the company. Maybe that's a sale. Maybe that's someone doing equity with the
Thank you.
creditors. We don't know, but there's a process, and I can just tell you from having looked at the bids, there's a lot of different ways people are trying to carve up value for the creditors, and we're working with multiple parties to try to find the best way to improve those proposals.
And I'm sorry, Greg, I wasn't trying to put you in the middle of this. There's just a narrative that all of our assets are being sold from under us, and I vehemently just disagree with that, because GK8 was being sold because we had no choice. We had to sell it, or otherwise we would get nothing for it.
Yeah. So there was a need to kind of sell that one in particular. So.
Sorry, just for the record, I am trying to find every process to issue shares in all these assets to creditors, and whether that produces more value versus selling them is what the UCC is what Celsius is analyzing. The UCC is not in charge of that process, right?
Yeah, right. We're not literally selling it, but they confer with us. They get our input, and we supported the GK8 sale for the reasons I mentioned earlier.
Thank you very much. And for the record, I support Scott, and I support Thomas. I trust them as our UCC chairs and co-chairs, and I think they'll do the best for us. And I think they've worked tirelessly during this process, just like most of us have. And I simply trust them that they'll do what's right. And I'm not in the business of second guessing them or Monday morning quarterbacking. Thank you very much, Greg.
Well, thank you, Otis. Yeah, and maybe just to kind of reiterate this, because I see this in the chat rooms and whatever recently. Scott and Tom and our other 5 committee members, they're not paid for what they do here. This is a large imposition on their time. We're talking to some or all of them, every day, but they're not paid for this. They're doing this because they care very much about everybody listening in here and all the other Celsius users. And, we've been very impressed by the extent to which they uniformly put aside their own personal interests to kind of think about things collectively as a whole. And we appreciate the kind words, but I want folks to understand, in light of some of the recent suggestions that they're getting paid or doing other things. All right. We've got a big court hearing tomorrow, so it's about 2:15. So we'll go another like 15 minutes, and then we'll wrap up for today. So
you can put me down.
Great. Crypto sexual. I'll Jammers. I'll activate you in a second. All right. All right. So Jammers, crypto sexual, you're on the stage. Let us know what your question is.
Hey, Greg. Just a couple questions and an observation. Thanks for bringing me up. I do think Celsius is in a good position in 2023 to make a recovery. I think we have the assets, we have the tools and the mechanisms in place. Of course, we still have to get through some court things, but the entire market in this bear market, said on Twitter, we're coming out of Chapter 11, where everyone else is like going into Chapter 11 or Chapter 7. So I think we are uniquely situated to come out of this, and but not everyone feels the same, right? Then before I get to my question, I want to ask a direct question here. I'm not trying to be combative or aggressive, but is there any reason why Simon gets to stay on stage for the duration of the call? Is he being held up as a higher class or a higher status than the rest of the creditors?
No, I thought he would have some interesting things to ask and say.
Yes.
I didn't remove I didn't remove Cam or Joe.
Well,
Some of the others
true.
voluntarily left.
It's just
I'm
that,
not elevating anyone.
okay, well, I mean, it does come off, it does smacks of preferential treatment. I have to be honest that a lot of people are asking me why Simon gets the preferential treatment on each call, coming up first, getting to stay on stage, answering questions directly to the creditors. He's not a representative of the UCC as far as I'm understanding.
No, he's not.
So
No,
if
the
a
UCC 's
creditor
not the-
asks questions, he shouldn't be answering or responding to the creditors on this type of call. He certainly could have his own call. So just an observation. With that, one more thing, I would ask the UCC, which I'm assuming is somebody at White and Case who's controlling the UCC account, not to retweet other people's, especially Simon's tweets. And let me tell you why I have a problem with that. I know yesterday he made a comment about not getting scammed and watch out for people on Twitter. But what ultimately happens is he uses that retweet as a daisy chain to basically continue the narrative with retweeting endlessly. And now you have basically put him up in front of the creditors as an audience. It's almost like a referral, okay? And the reason why I have a problem with that is because there are things being said by Simon that are flat out not true. I mean, he said that Celsius was shut down because it was selling illegal securities. It's a word for word. So you can't make
cease and desist,
Okay,
and it
so
was.
let me just jump in here. So, you know what? Yes, we retweeted something that Simon said. I think it was brought to our attention why some people found that objectionable. We want to be fair, and we're a fiduciary, so we took it down, and then we rebroadcast it on our own message about the scam that was mentioned in court.
Yeah.
Look,
just understand this, Greg, that we're here for the people that are here that are promoting and working their hardest for a Celsius recovery. Any preferential treatment towards an individual who seems to be diametrically opposed to a Celsius recovery, in this case Simon, it's very disconcerting for us, because if it looks like you're giving preferential treatment, then it doesn't look like this is a level playing field, and there's no balance here. So we're just asking for a level playing field, no preferential treatment.
All right.
This is actually a really good point that Jamers has introduced here, because he's talking about preferential treatment for people working on the recovery. The rest of us in the community here, we haven't seen a plan. What recovery are you working on? Is that preferential treatment? Can you explain that a little bit? It seems a little confusing to me.
Greg, may I respond?
Was that directed at me or?
No, that was to Mr. Anderson.
Sure, go for it.
I didn't catch that. Was that for me, Cam?
Yeah, go ahead.
So, Cam, part of what we're doing is trying to keep when I say we, I mean the whole community. We're trying to keep each other informed on what's going on, right? Zach comes on constantly. He brings up information on what's been going on in the courts, what the coin reports show, what the statuses are, so we can be best informed to understand, are we in a good position for a recovery, right? But when you have somebody who's literally just this week telling people if they go with the recovery, they'll be lucky to get pennies on a dollar, you're not doing.
No, that's true. Read my tweets. But the original comment was, did Celsius have a cease and desist order? Yes, they did, because they were selling illegal securities, and the regulator confirmed it yesterday on the court.
But here's the other problem: is you're going on wider broadcasts outside the community, and you're really fomenting and fanning the flames of hate towards Celsius, and now it's actually gotten so bad that we're getting more and more death threats. And we got death threats right after the withdrawal pause and right after the bankruptcy, but now they're starting to ramp up again, right? So it's big.
Well, for the record, I'm definitely not trying to incite violence, and no one should be getting death threats.
Right, but the fanning of the flames of hate, when you're out there saying the Mashinsky stole and they're funding their businesses with creditors' money, it really just, it brings out the nut jobs. And if that's not your job to make those claims, Simon, that's examiner's
Okay.
job to make those claims.
Here's look, we're trying to, it's like an unwinnable, it's like a thankless task. Let people up here and try to be as fair and balanced as we can. I hear you. We do not privilege any person over anyone else. If that is a perception, I regret that. We'll take that into consideration. But since we only have a couple minutes left, I expect you guys can continue this debate on some of these other forums. But let me. I see that Ronan is here. I don't think we've had someone from the loans speak yet. So let me, for our last couple minutes here, let me let.
I would ask that you also bring up Zach. I think it's only fair that he gets to opine. Thank you.
Okay, if we have some time, I'll try to do that. Ronan or whoever's running the loans today, you're on the stage now too.
He's showing as a listener right now.
Celsius Loans, you're on the stage. Can you do you have any? Can you hear us? All right. All right. In the meantime, I'll invite Zach up. Zach, I'm going to activate you in a second. All right, Zach, you should be on the stage now too, if you can hear us. Zach, I brought you up. If you have a question, we have a couple minutes left.
Yeah, I hear you. Appreciate you guys having the call, and I wanted to touch on a few of those points of, I think, a bias that you may be putting out that you're not seeing, even on this very call. Inviting Cam Cruz to host a space with you. He has a particular point of view, and that in its own self, bringing him up as a part of this call creates this sense of bias that we would really like to eliminate from the conversation. Him and I had a great conversation the other day to talk about these things, and it's all about open debate. But actions like this, and sharing Simon's tweet, he has people blocked; they can't see it. It creates the view of a bias from the outside.
Just to I appreciate the perspective. We will always think of ways to avoid any appearance of bias because we are, for all of the account holders, we're not trying to privilege anyone. Candidly, we reached out to Cam because he's been extremely critical of us, and we thought it would be helpful to have someone who is very vocal in some of his criticism, very pointed criticism of what we're doing, to come up here. And I appreciate he has one perspective. We've tried bringing Otis and Anthony and others who have some different perspectives, and many other people. But that was all there was to it. If there was an appearance of prioritizing some over others, we regret that. That's not our goal. It's to, frankly, we wanted to have a lively conversation with people that have been very active and have very strong views about the things we did. And if there was a conception I regret that, but that was the story.
Sure.
I'd also like to just jump in here when it comes to bias, because I think looking at this from having trying to say there are multiple sides, that's something that I just disagree with. It should be all about data, looking at what the facts direct us towards. And if there really is a plan that can lead some sort of recovery when it's introduced in February, great. I could support that, if we can believe in the numbers that are projected.
Absolutely. We have to see what the plan is. And I mean, for a long time, it was debated if there was a plan, and many people were vehemently against the idea that the company was even working on a recovery plan. We know fact for a fact that they are, and maybe that's not the solution to this case. But, again, I just wanted to bring it to the attention of the UCC that, the community is in a very divisive situation, and anything you guys do that shows some sort of impartiality is a reflection on us. And then, quite frankly, it gets used against us and when we're presenting or providing information, because they say, well, the UCC had me up on stage and not you, and therefore your ideas or your information is not valid. So I appreciate you guys just hearing that.
Right.
We're interested in the very best ideas here, because that's what it's going to take. And this process is hard on everybody. We realized that we had some more explaining to do, especially after the hearing yesterday. on that specific issue. And we thought that this conversation would just be really informative for the rest of the community, which is why we had some time. We wanted to make it recorded and just able to be distributed so people could just understand we are working for you and this is how we're doing it.
Appreciate that. Thank you.
Yeah, that's great, Scott. And the only point I was trying to make, I mean, Simon is free to make his arguments all day long, and I don't expect Greg or anybody on the UCC to stand up and say, well, we don't agree with that, Simon. That's not your job. But what I was suggesting, I mean, this is like the fourth UCC call, and Simon was brought up first, like every single call, and given the mic. It's that if that's not showing a little bias, then that's my point.
We don't want to show bias. You know, we will continue to think about this. But look, we want to get we want to get our message out to as many people as we can. And we would like to, frankly, engage with people who have disagreed with us. So, because we want to answer your questions and earn your trust for this process. So, but look, we have no favorites in the community. We have no favorite, constituents or subgroups or anything like that. We work for all of you, and I know there's a lot of desire for people to do things on their own and separate from the UCC. I can't stop you from doing that, but if you have issues that you think the UCC should take up, I encourage you to reach out to us. We have a lot of resources. We're paid by the company. I would just encourage you to reach out to us if you think there's things that we should do or focus on. And, with that, we'll do this again soon. I hope, I regret any appearance that we're privileging anyone. It's not our goal. We're trying to get as many people up here, and we appreciate everyone speaking and talking their minds today. So thank you, everybody.